Now starting, all attendees are in listen-only mode.
Welcome, Tradespooners, to tonight's pick. Let's take a look. For the date, March 28, 2014, we're looking at long Morgan Stanley, ticker symbol MS. Let's scroll down and take a proprietary risk, reward, and value momentum ratings. Our risk reward's coming in at a lower level of 3 on the Tradespoon. Again, at that right off of mid-range, so some level 10 would be the most favorable expected risk and return outlook. Now, taking a look at the price action and option action, MS, ticker symbol for Morgan Stanley, the closing price on the 27th was $30.39, and the 52-week high was $33.52. It's off its 52-week low of $22.16. We see that the IV percentile rank is coming in at 26.28. That means that the IV percent is up 26% off of the 52-week low of the IV as it's been calculated over the last year. Looking at the return on capital for the spread strategy, we're looking at 100%, and the probability of success is coming in at 62%. And the estimated move being calculated right now is at $2.20, and the options that we're looking at will expire in May. Now, as we scroll down, let's take a look at the picks. The stock trade, buy stock, ticker symbol MS, Morgan Stanley. We're going to put a limit order in to buy stock at $30.39 or better. Once we're filled at that limit price, we want to put a sell to close limit order above our entry price. Specifically, we're going to put it above the entry price by $3.90. That means that roughly we're going to be getting out of this trade at right around $34. So you can have a sell to close at right around $34 good till cancel. Now, we are going to put a sell stop limit below our entry price. Specifically, we're going to put it in, let's say, right around $26. We'll say we'll have a sell to close limit order good until cancel at $26. As always, use prudent size and risk management, meaning that we suggest that you only put about 3 to 5% of either the cash available or the percentage of buying power available at the time of the trade. Now, taking a look at the options trades, we're looking to buy the May $30 calls. We're going to put a limit order in at $1.40 or better. If we are filled at $1.40, then we're going to put a sell limit above our entry price, specifically 90 cents above. So we're going to put an order in to sell to close this particular order at $2.30 or better. Now, we are willing to, and our risk is going to be 90 cents on this. So as a matter of fact, we will put a sell stop limit good till cancel on this particular option at right around 50 cents. So once this option is trading at or around 50 cents, we will cut our losses and get out of the trade. Now, taking a look at the option spread trade, we're going to be doing a bull call spread where we're going to be buying the May 30 call for $1.40, but we're going to sell the May 31 calls at 78 cents. So it's a dollar strike higher than what we're buying, and we're going to do that for a debit of 58 cents. So that means we're going to pay 58 cents for this dollar call spread. That means that that is our risk, 58 cents, and our target gain is 42 cents, or in other words, when this spread is trading at or around $1. As always, both these option strategies, we suggest that you only use about 2.5 to tops 10% of the either cash available or percentage buying power available in your account. And if you're new to Tradespoon or you're new to these strategies, utilize our proprietary virtual trade to start working out your risk and capital management as well as your comfort level with these strategies. Taking a look at the stock chart, and actually we're having an issue with the stock chart, so we apologize for that. That will be remedied over the next 24 hours. But taking a look at the key stock events, one of the things that we want to start looking for is whether there's earnings, any other types of information, and we can see that we're having an issue, so we're going to update that as soon as possible, and we will come back with an update on whether there are earnings, but right now we're not seeing it. As always, if you need any help, email us at info@tradespoon.com, and keep an eye on our trading videos. We'll keep expanding the library. We actually discuss the very spreads and single leg strategies that we utilize. And next week, in the first week of April, we are going to be talking about these very topics: IV percentile, risk, return on capital, the probability of success, the estimated move calculation. We're going to talk about those components, and we'll drill down on the value, momentum, and risk-reward ratings that are brought up with the Tradespoon founder, Vlad Karpel. So join us next week. We're looking to do those webinars on Wednesday night and Thursday at noon. Keep an eye on the upcoming webinar section for more information. All right, folks, that's the pick for March 28th. Long, Morgan Stanley. Thanks a lot for listening.